If you're a beginner, you'd probably use 1.5 or 2. You would use, of course, this related to our equity, account equity, and related to our profit projections that they are worthy. Okay, so let's move on. We would consider again, before we leave, to redo this on a daily basis seriously, so long as there is this positive plot on the 1 hour. We don't want to miss out on this. Again, we check the 1 hour every day. If there's a positive plot, even below overbought, even below 0 is actually considering a positive momentum plot on the 1 hour. If this is not a customized CCI, this is not a customized, this is a standard CCI. We'll show how to do a customized CCI tomorrow, on Monday. It's really very simple. And if everybody, you just move your overbought and oversold levels related to level 1s of the breakout wave. The CCI becomes actually running in line with the current, only the current tradable wave, not the waves before that, or the current tradable cycles. You get more efficient or entries at the relevant bounces, of course. So at this CCI plot that we're looking at, you could get a negative reading on the 1 hour. It is not customized, and if it were customized, it would not be a negative reading. All right, it would mean that you are getting the right bounce and you're standing out. That's why you should have it only related to the portion of the market that you're trading, which is the tradable cycle at the point of entry. So anyway, if we get a positive CCI plot, then very early Asia morning, we would consider to buy the pivot level, at least half size, and buy 50% or between that P level, the pivot level, and the S1 level, or at least full size at the S1 level. Take profit at R1 or at top on positive momentum again. Momentum picture is very important for us. Very soon we'll be at, if this momentum continues, very soon we'll be at 160. So even for swing trade, it's very good. All right, and we would expect that we are saying 160 towards the end of February. If we continue to get the same momentum picture, remember that weekly chart, that's why I've been looking at it and monitoring it. We're going to 164 and 165, because if the same momentum picture is a trending picture on the weekly, on the daily, on the 4 hours, on the 1 hour, then remember the cycle here from the bottom of H all the way to that level C. The new cycle will break out, because all the current cycle that we're in will break out into a 5, and that 5 must take you at least 27.2% above the top of the old cycle, because all the momentum plots are positive. So you're going to 165. It may not show on that February plot, on these February pivot levels, but we simply break out of the pivot levels for February. Let's take a look at the internal actual higher degree momentum plots. So there's going to be an opportunity now to get into this market, because there's a bit of a correction, even if the numbers are good, and we're going to get to see that 156.85. We didn't relate with the stop. We didn't talk about the stop. Okay, so the stop today is, in a trending market, would always have a stop below S1. By the time you get to S1, the market has reversed, and it would mean that we really don't want to be into the market. So S1 here comes at 156. Remember, we're buying 156.8. We also want to have something that is flexible and realistic. We'd use 50% between both sides, which is 155.8 or 155.9. Let's relate this to our pivot levels. So for February, we're having 155.57. This is actually the lower fluctuation level. We would consider to have a stop at 155.8 if you're entering at 156.85. It's about 100 points down. And let's have that rolled in. So I'm sorry about the cluttering, but we can just take off some of these. We all know now how to operate stops, hopefully. You're seeing two necklines here. If we get to that first neckline, we don't really have to close. but we'll note that we've got to that neckline. On a bounce, we just close out on the right shoulder as close to our entry as possible. We'll have entered 156.8. we cannot really get that high, but we can close out, say, at 156.3. This is, of course, provided that we have at least two negative internal and intermediate term momentum cycles. So I would only consider to close on a right shoulder if the 15-minute momentum is degree 3 and or approaching at least below oversold or at oversold, and the 1 hour momentum is negative. So it doesn't have to be degree 3. I would want to be safe, play safe. I would then close out as close to, of course, the market can change any minute, anything can happen, any new fundamental breakout can happen. So we must understand how to react. All right, that our stop level here is on top of a level 1. All right, we don't just expect that the market, because of the strong momentum plot that we're on, will just move on higher and would have no problems. That is probably what would happen. Okay, in a statistical confirmation, that's what the market cycles and statistics confirm will happen. We're inside of an Elliott structure, about 50% of that Elliott structure, so that is what will happen. But we also want to be prepared to be able to get out if we are not correct. We have the count already on our own analysis as a 1, 2, 3, 4. Even if this was a 5, it shouldn't really fall below level 3. That is level 3. If it does fall below level 3, it will bounce at level 1. We don't close at that bounce, but we're prepared to stop if we fall below this bounce. There will be, of course, a strong bounce up if we fall below that red line. We do right shoulders. We close as close to our stops as possible if the momentum picture has changed. All right. So sterling yen market is a buy at right now today, if you wish to join, 156.8. okay, for short-term traders, we are probably going to the next resistance at 156.8. we're taking this to 157.3. we already reactivated that. If you want to hold on to this trade, so long as you're having positive momentum on the 1 hour and 4 hours as detailed, you can actually hold this all the way at least to 158.2. we're looking at these levels here, 158.97 and 158, of course, and at least 158.97, which is 159, and then 160, and we move on gradually.